How's it going, ladies and gentlemen? Welcome back. In this video, I'm going to talk about when to buy and sell a stock, which is also a very important lesson from my past experience in stock trading. So before we get started, just a very brief advertisement to another my website recently I created myself. So previously, as you know, when we compare different stocks, we have to open a lot of tags, for example, Yahoo Finance, Seeking Alpha, etc., and compare all those kind of metrics and data one by one, for example, P, PS, revenue, etc. So that's quite troublesome. And if I create another website called comparestock.com, which can compare all those kind of metrics horizontally among different stocks, which is extremely easy and comfortable for users to compare. And most importantly, it's free and open. Everyone can join it. Therefore, don't forget to check the website comparestock.com. You can definitely find a lot of useful information there, and this will be a very powerful tool for you to compare stock and make the best decision. Alright, let's get back to the topic here. So here I would like to illustrate with my past experience in trading stocks, which are Tesla and NIO. Tesla, there was a time around 2 years ago, the stock price was under $300 per share before the stock split, and therefore at that time I purchased a lot since I know it's great future for this company and I fully believe in it. However, later, just after some time, I just think, okay, whether I can just do a swing trade here. So swing trade basically means you buy low and sell high. And when the price drops again, you purchase more. So it's just like to swing trade. At that time, I thought that was quite applicable. So therefore, I just sold it out like with some very tiny profit. However, later when the stock price just skyrocketed, I just didn't get any chance to get back to the car again, since for my preference or my habit is I would usually buy the stock when the stock price is dropping, while I just won't buy when it's skyrocketing. So that's just my personal habit. So I didn't purchase that for a long time until when the stock price stables around $600 to $700 like a few months ago, after stock split of course, and I purchased that. So this is a very kind of miserable or painful lesson. So if you imagine if I hold the stocks like $300 before split, as of the stock price today is $700 just pre-market. So if you times by 5 is 3.5k, and which basically means from $300 to 3.5k, which is around 12 times higher the stock price. So if you can just imagine, I just don't pretend to be that smart a long time ago, and I just held these stocks firmly without any hesitation. Actually, I can gain a much more profit here. Another example here is about NIO. At that time, NIO has a very high chance of bankruptcy and the stock price drops under $2. It's like over $1. And at that time, I also purchased a lot of NIO stocks. My inference that this company won't collapse was quite simple at that time, since NIO at that time has already signed the cooperation document or contract with Anhui province, the government. So in China, this is the way. If you have some deal with the government, you can definitely do that well, since government in China is everything. At that time, I sold it and I purchased stock and I sold them out like around $2 above. So it's less than 100% gain at that time. The reason was quite similar to Tesla, since at that time I was more like a risk player. It's not a 100% player that the stock price will keep rising at that time. So I just gained some profit and thought, okay, that's it. That's all the profit I need to gain. However, if you see the NIO stock price today is like $39, $40, even after the recent correction of the stock market, it's still that high. So if you imagine I just hold these stocks all the time, then that is definitely a really great return. Let's back to the topic about when to buy and sell a stock. These two questions are really hard to answer. However, if you think it in the long term, everything becomes easy. When you buy a stock, if you think a stock price will increase in the future, you just buy it. If you think a stock price will not, then you just want to buy. And as for how to sell, when to sell the stock, I just don't think this is a very troublesome question if you think long term, right? If you just hold it still, You just don't care about this kind of money, just live there. It's like 20 or 30-year fixed deposit in the bank and give a very high rate of return. And of course, the rate of return by investing in stocks, a particularly good stock or growth stock, will definitely have a much higher rate of return than those banks' fixed deposits. However, a very typical mistake for beginners, also to me, was when I got money, I would just purchase the stock immediately. And this will cause a very troublesome problem when the stock price is keep dropping. You just don't know what to do. That's it. Since you just don't have much money left. So the professional way to do this is to have around 10% to 30% of cash in hand, and whenever the stock drops, you just have more cash to purchase those kind of undervalued stocks. Usually, I would personally purchase the stock when the stock drops another, for example, 10%. If I just don't have so much cash in hand, I will purchase until it drops 15%. So that is usually the way how I do. And of course, at the very beginning, I have to gauge what kind of the percent of a particular stock in my portfolio would be. So for example, if I say, okay, for Tesla, I would like to give 20% of my portfolio percentage to this stock. And therefore, I have to calculate how much money I will spend into it and how many times I would purchase Tesla stocks. So in that way, I can calculate how much money or how many shares I will buy in each time when the Tesla stock price drops. I know everyone just think they're smart, right? I believe everyone who put their money in the stock market will think like that, definitely. However, the point is, only a minority of people, investors in stock market can make money. That's the truth. No one can deny it. I know a lot of people, including me previously, I would sell the stock when, for example, I gain 20 or 30% of the gains of a particular stock and sell it off when it goes down below a certain price. In this way, it seems that you can make a lot of money since you collect those profits whenever you think that is satisfied, and you just stop losing when the stock price drops under a certain amount of value, right? It looks legit. It looks perfect. This is a very perfect way to make a lot of money in the stock market. However, behind this strategy, basically, it's more like gambling, since whenever a stock over a certain price will sell, and also you will sell it when the stock price drops under a certain price, right? But how can you know in the short term where the price will go? You can never know that. So even though you pick a perfect stock, you buy it at high and sell it at low, however, probably just next month or next year, the stock price can just skyrocket and you just don't have the chance to get to this car again. If you truly believe in a certain company to its future, you have to put the money there and to let them make a lot of money for you. Of course, you might be wrong sometimes since the company may not just as what you thought that would be. However, in most of the cases, even though, for example, you invested in 10 stocks, so 2 failed you, while the 8 of the stocks just proved, okay, you are right. Even in those kind of scenarios, in the long term, you can still generate a lot of profit. A very good example here is Warren Buffett. Whether he picked a stock, even though it's a good stock, while in the short term or in the very long term, that actually didn't bring any profit for him. Yeah, it is. For example, BYD, Berkshire Hathaway invested in that company a long time ago. So at that time when they invested in that company, the stock price increased a lot. However, in a not very long time, the stock just crashes again, and even below the price that they purchased. However, Berkshire Hathaway, or Charlie Munger at that time, he was in charge of that business. He just didn't, sell the stock when the stock price increased, for example, 80%. While he's just allowed the money waiting there. He believes in that company, especially he invested in this company. Investment is a really important thing. It's more about trust. You can't just invest in this company, for example, 1 month and say, okay, I just lose trust for you and I just take all my money back. That just doesn't happen. And the times proves that Berkshire Hathaway is right. They picked a great company, and even though in the short term they lose some money from the investment, but over the long term they still make a lot of money. Another very good example is Hans. At that time when Hans and Kraft merged together, even though Berkshire Hathaway paid a legit amount of money for Hans, but Kraft At that time, it was merged by another company, and the price paid for that is not good. So for a long time, like 1 or 2 years, the handcraft stock price is almost there, and sometimes increase a little bit, but just draw it back. However, they are still holding this stock even nowadays. In conclusion for this video, when to sell and buy, this is the hardest question in the entire stock market. However, if you can simplify this question and see something in the long term, this is actually a very simple question. You even don't need an answer for it, since you know what to do. Hopefully this video can help you to make some very good decision in your life, especially about investment. You have to know if you're very young, if you have a very early stage in investment, you have to be a little bit patient. And over time, since you have a lot of time rested in your life, you can just use the time to prove that you're right. It's actually not difficult to become Warren Buffett for 1 or 2 years. The most difficult part is you can be the Warren Buffett over your lifetime. And you, if that's the true case, you'll be the next Warren Buffett. Alright, I hope this video can answer some of your questions. If you have any concerns or other interesting topics, feel free to leave them in the comments below. Hope to see you in the next video. Have a nice day.